Bitcoin has seen an explosive rally toward 30,000 US dollars. Is this move the start of a high time frame shift in strength? Are the bulls reclaiming control, or is this nothing more than a bull trap? Let's go ahead and jump into the video. Okay, legends, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. What an absolutely insane start to the month. So massive volatility in the market, a huge correction toward the downside, followed by an equally huge, if not larger, move back to $30,000. The big question in the market today is this move a start of a high time frame reversal? Are we continuing back upwards? Or is it nothing more than a bull trap? And that is exactly what we're going to be answering in today's video, going over the small time frame, the high time frame, the technical levels, and the most important structural levels you should be watching out for reversals. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, the relevant news events, and economic news. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link below. You'll get access to charts, updates, news events, videos, information, educational posts, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and the news. If you're interested in joining our VIP channel, you'll get access to two groups. You'll get access to our main VIP channel and our trading and chart and education group chat. You can see our main VIP channel here. We post trades with exact entries, exact targets, exact stop losses, and our group chat here where we're learning to trade, teaching you guys how to trade, showing you a bunch of stuff, and we have all of our members in here developing their skills and trading alongside one another on a daily basis. If you're interested in joining that, go ahead and contact me via this message here. You can find our entire trading track record over here. We have 30 months of data, all tracked, over 700 trades at a 79% win rate. Fantastic stuff. Check it out. Let's get into a video without further ado. There's a lot to talk about, but before we get into it, let's discuss the news, because we did see this come out actually a few hours ago at 9 a.m. This is around about 3 hours and 30 minutes ago this was released. Michael Saylor from MicroStrategy plans to sell up to 750 million to acquire more Bitcoin. And the big key word is here, he might, right? He might buy more Bitcoin. And on this channel, we see through the BS. You guys are educated. I know you guys are educated. We can see what is happening over here. These news events, they are strategically placed to drive price action. Do you really think Michael Saylor or any big firm is going to come out publicly and say, we might buy an asset? Of course not. They have already either bought the asset and thus bringing the news event to pump up the price, or they are not buying the asset and they already have acquired it in a previous date and trying to push the price up to bring in new liquidity. This is not something we like to see when the price rallies aggressively. When we get the price rallying aggressively on news such as this, which is more speculative, we can almost say we're in a position of what we like to call irrational exuberance. So it is something we are worried about. This is one of the key arguments we're going to be making today in regards to a possible rejection, but we're discussing this a little bit more detail. But I'd like to go ahead and say, guys, if you're looking at these news events and you're buying on these news events, you're either going to be late or you're going to be wrong. You might catch the back end of the move, but it's very important to understand, guys, these people, they use the media machine to manipulate the price in their favor. If they are telling you what they're going to do, chances are they have already done it, or they're trying to get you to do the opposite of what you should be doing. So definitely pay attention to it. I'm not saying this is the be all and end all. I'm not saying the market's going to crash because of it, but I am saying this kind of stuff is when you should be raising your alarms, raising your walls, and starting to trade a little bit more cautiously, because this news can drive a lot of emotion into the market and break key structural levels like butter. So watch out for that. Moving on from there, guys, let's get into the market data. As we can see, a pretty fantastic start to the month. Obviously, yesterday we saw a lot of volatility towards the downside, actually closing out around negative 0.97. We are now up 2.66% on the monthly return. Looking at the volume has seen a decent move toward the upside, not very high though, sitting at 78 billion. rising around 30.9%. Looking at 24-hour liquidations, we are up to 94 million, only up 3.85%, as yesterday we did have a lot of long liquidations. Moving into those liquidations, we can see of the liquidations, we have the vast majority of those, around about 80%, coming from those short positions, with 20% coming from either early or late longs on those drops toward the downside, or of course at those peaks on the way up, high leverage positions. So moving on from there, let's take a look at the volatility. The volatility on the 30-day and 60-day period. On the 30-day period, we are still moving toward the downside. Again, it does take time to adjust. It is taking volatility over a 30-day period, so it will smooth out and it will take some time to actually calibrate and adjust to this recent surge in price action. If volatility continues toward the downside, however, and doesn't adjust for this price action, this could be a bearish sign. Looking at the 60-day period over here, guys, we can still see volatility is plateauing. I would like to go ahead and say our 30 and 60-day volatility index is at the lowest it's been since mid-2020. COVID-19 crash. This is how low the volatility is overall on the index in the market right now. Volume and volatility for cryptocurrency is awfully low. Very interesting stuff to watch out for. Let's go ahead and jump into the DXY. The DXY is on a moon mission. DXY, absolutely fantastic stuff to see from the dollar over here, pushing quite aggressively upwards from that lower support. A lot of people were saying we're going to down, we're going to crash and burn. Over here, we were saying support is support until it's not. Watch the DXY potentially bounce some. If we're seeing that reclamation of the support level over here, this now is our major support level, pushing up to retest our next level of resistance. The key level of resistance we're watching is a downward trending resistance dotted line. If we do break above that level, we can expect a continuation upwards. This will be bearish for the markets. Watch out for that, guys. That will be very, very bearish. It could even be bearish confirmation, confirming a continuation down for both stocks and cryptocurrency. Until then, any point over here could act as a rejection point. And of course, if DXY moves down, that is going to provide relief. That is going to be bullish for cryptocurrency. Watching the economic calendar for key economic news, we do have, of course, coming up very soon, which is in 2 days' time, we do have the unemployment and NFP data. This could significantly shift the probabilities in favor of more interest rate hikes or less interest rate hikes, as it is leading for inflation. If this does suggest inflation is rising again, that could increase the probability of future rate hikes and thus bring the markets down as it adjusts for those rate hikes. If this does if this does suggest that inflation is falling, this will be relatively bullish. Watch out for that. The next one, of course, is inflation data itself, a direct correlation between inflation data and what the interest rates will be doing, looking on the 10th of August for that release. Watch out for those. Let's go ahead and get into the stock market. S&P 500 is still at resistance, watching out for that. And of course, the Dow Jones is attempting to break out of these high points. We still do have these local high points over here. We are challenging. So in this little bit of a struggle spot, watch out to see how it plays out. Again, very heavily dependent on what the DXY does do. Moving on, let's get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And we'll talk about what we have seen thus far. In the last 24 hours, Bitcoin saw a significant correction toward the downside to start off with. We didn't do a video yesterday, so we're going to go ahead and discuss. We saw a significant correction toward the downside upon the loss of our rising channel formation. We had a rising channel formation over here, which we've been discussing on the channel for quite some time. We saw the breakdown of the rising channel formation, and we actually reached our target. our target was sitting at around 28.84 to 28,800. We saw the breakdown, we reached a target. We then saw a strong liquidity grab toward the downside. When we see these strong liquidity grabs, it generally represents points of reversals in the market. We have seen a strong liquidity grab toward the downside, breaking below a major level of support, pushing into this liquidity grab and then pushing the price back upwards. Upon around about this point of here, as we were retesting this resistance, that is when we got hit by the news event and the price went ballistic. The price continued upwards, breaking through almost every single point of major resistance. The key level of resistance we actually broke through was, of course, this liquidity zone at around 29.6 to 29.7, busting right through that level, pushing upwards to retest our next major point of resistance, which you can see on the chart sitting between 29.8 to 30,000. 29.8 to 30,000. If you've been watching the channel, if you've been paying attention on the price action, you would know this level was the major area of support, which provided Bitcoin, again, support for around 30 days while it consolidated and compressed within this high time frame horizontal channel. As you can see, we broke down, we have pushed back upwards, and we are now retesting that same level. So from a structural perspective, Bitcoin has rallied aggressively right back into a major resistance. The big question is, on the smaller time frame, where are we going next? And number two, on the high time frame, has this move actually changed anything? What does it mean? How has it impacted the charts? And what do the macro charts now suggest about the next move? So to answer all of it, we need to go from a high time frame back down to a small time frame. Let's really go ahead and dive in. So first and foremost, starting on the monthly chart, we saw that monthly candle close. It closed underneath 30,000. Again, not ideal. We do really want to start seeing these monthly candles close above 30,000. As you would know, that 30,000 level is a major point of resistance on the chart. I had people asking what these points are. Again, these points are going to be our range lows, our yearly low supports, according to our wicks and our candles and consolidations, more importantly, derived from our liquidity levels based on the VRPV peaks. The VRPV peaks suggesting the price points or price ranges of highest historical orders, therefore highest level of liquidity and levels of resistance / support. These horizontal levels are represented by singular price points, but in reality, they are spread out a little bit thicker. We're just going to use these horizontal levels. If we're looking in prior cycles, we have seen these levels provide massive amounts of support and resistance. Support for a very long time in a bull market, and then resistance when we break below it after we capitulate. We've seen it in that cycle, we saw it in 2018, we have even seen it in 2020. We are coming up and we are retesting this level again. The close of the monthly candle was neither bullish, it was neither bearish. It was kind of meh. It was kind of in the middle. It didn't really mean too much. It would have been bearish if it closed lower than 28.4. It would have been bullish if it closed over 31 to 30. So we're kind of in this middle territory. We're kind of still in this indecision point on the monthly chart. Looking at the monthly chart from a 4-year cycle perspective, where would the next move occur? If the price is able to get back above this level, we can expect something similar to what we have seen before. If we look back in 2016, we saw a period of consolidation at that yearly resistance before breaking upwards and moving towards that dead cat bounce high point on that monthly chart. In this instance, that would bring the price to around $48,000 if it had to actually play out. If we go over to the weekly chart on the Gaussian channel, every single time we have seen a weekly breakout of the Gaussian channel, okay, on the log scale, on the normal scale, we're going to show on the log scale, doesn't matter, doesn't change it. We have seen a continuation upwards to retest that key point of that dead cat bounce, that dotted trend line, prior to breaking back below the Gaussian channel. So we'll show you over here. We broke out of the Gaussian channel. At the same time, we broke above that horizontal trend line. We remained above the Gaussian channel until we reached that dotted trend line. If we go to our other instance, which of course was 2019, we broke above the horizontal trend line. At the same period of time, we broke above the Gaussian channel. We remained above the Gaussian channel until we retested that dotted trend line. We retested it and then we corrected down. In this instance, we are looking for the same thing, right? We are looking to remain above the Gaussian channel until the price pushes up to retest this trend line. If we fail to remain above, and fail to remain above will be a single weekly candle close below the upper band of the Gaussian channel, that will be a significant indication that the pattern we have seen could potentially be failing, and we could be seeing a shift in momentum and direction toward the downside, which could lead to a high time frame rejection. So from a high time frame perspective right now, on the monthly chart, nothing has changed. This move has not changed anything. The monthly candle has not changed anything. From a weekly perspective, we're kind of in that same position. From a weekly perspective, not much has changed. All we have now seen is a strong weekly move upwards on this candle. But the key level of support we only ever cared about was, of course, this Gaussian channel upper band. Provided the Gaussian channel upper band was able to be held at 28.4K, okay, 28.4K being this major level of support right over here. Provided that level was able to be held, the trend on the weekly chart was still very much in an uptrend. Everything is still the same on the weekly chart. Nothing has changed. Let's go ahead and take a look at the daily chart. We'll bring up some technical indicators on the weekly in just a moment. From the daily chart perspective, we can see two things. Number one, the overall weekly trend. And yes, the weekly trend is present on the daily chart. This is going to be our weekly trend. The overall weekly trend is still intact. So we have still remained above this weekly uptrend. Number two, we have bounced from the midline of the Gaussian channel. And the bounce from the midline from the Gaussian channel is not a strong enough indication of strength. It is not a strong enough indication of strength. So what this chart is telling us right now is we have an overall weekly uptrend. We have seen a solid bounce in the daily, but that bounce in the daily has not been able to push back above the key trigger point, in which would result in the bulls reclaiming strength, which is going to be this 30,400 level, this POC level, this convergent point of the upper band of the Gaussian channel and that horizontal POC. That is where the bulls reclaim control. If the price is able to push and get above 30,400, that is when the bulls reclaim control and will have another attempt at breaking above the parabola. The parabola is our parabolic curve. It is represented by this blue trend line. We can see it represented on that daily chart. And again, I have actually slightly adjusted it accidentally. We'll go ahead and pop back to where it was. This parabolic curve is represented by this blue trend line. If we break above the parabolic curve, that will be an early sign or an early indication, an early trigger for a continuation back to 32,000. 32,000 being that main level of historical horizontal resistance on the chart. If we are looking at the next move upwards of Bitcoin on a macro scale, we are looking at this gap right over here, this period of volatility. We drag it across, we look at the VRPV, we can see a significant gap in this range. This represents a low range of historical resistance, which means there are very few orders in this range historically. If there are less orders, there is less volume requirements to push the price through. If we have positive momentum pushing into a low resistance range, we have the volatility to push through, we have the volume to push through, and the price moves upwards aggressively. When does that trigger? Look at the VRPV. When does it drop off? It drops off at 32,000. Therefore, 32,000 is a bullish trigger for the continuation upwards on the macro chart. That is still the same. Nothing has changed in regard to that. Let's take a look, guys, at the bearish scenario on the weekly. We're talking about the higher time frame. We'll get into the small time frame in just a moment and discuss the bull trap or bear trap or whatever the hell it is. Looking at the high time frame, the weekly trend is intact. The weekly trend will be intact until two things occur. Number one, we start to see the price fall below 28.4. Remember, a loss of 28.4 will almost guarantee a move towards a retest of this trend line. A loss of 28.4 will move the price towards this trend line. If we retest this trend line, we will have completed a head and shoulder pattern. That measure move target can take us as low as 22,000. If we do retest this trend line, we are also looking at momentum. If the momentum drops below this trend line, that will be a negative momentum shift, and that could push the price toward the downside. It could give the price that negative pressure it needs to push the price even lower. I don't know why my indicators aren't working over here, but we're going to go ahead and bring up our market cipher B and show you guys on a higher time frame really quickly what we're talking about. So on the 7-day chart, we can see, guys, we have these two drops on the 7-day chart representing a bearish divergence. So again, we have rising price action, we have falling momentum. This is a slight indication of weakness at resistance. It doesn't guarantee that Bitcoin is going to correct lower. Again, since we got that indication, Bitcoin has already corrected around 10%. 20%. So we have already seen an initial correction. We may not correct lower, but what it is suggesting is whilst this resistance remains, whilst momentum remains negative, the correction is likely and the correction is possible. I personally don't think it's going to happen, but I don't like to say anything up front. I think it's better to watch the charts and data. I would like to believe the market is going to push past 30,000, push past 32,000 and go into a bull run. Eventually, I'd like to believe that will happen sooner or later. I think that everyone would like that sooner or later. But the reality is, as long as we see this weakness on the chart, we have to be open to the possibility of these potential corrections as they are relevant, they are applicable, and they are very important. You cannot avoid the data. Let's go on to the smaller time frame. So is this move a bear trap? A bull trap? Well, my initial answer would be abso-freaking-lutely it is, guys. We saw this rally on this news event. We have pushed up into a major level of resistance. We can, at a bare minimum, expect a potential rejection from here. We may not go all the way down to 28.4, but you'd be stupid to be entering high leverage longs at this level of resistance. This is a major level of resistance. So if that is the case, two things. When do the bulls reclaim control? Well, it depends what time frame you're looking at. Because if you're looking at the smaller time frame, the bulls already reclaim control. But if you're looking at the macro charts, which is more relevant in today's video, if we're looking at the higher scheme, the next month of price action, the bulls really start to reclaim control. Above that key level resistance has been the same for a very long time. That 30,400 to that POC level. This is where the bulls need to break above. As you can see, the VRPV tells all. This is our peak on the VRPV. Below, we have the VRPV dropping down. This represents increasing resistance, right? Since we're moving from here upwards, we have progressively increasing resistance. If we get above here, we have progressively decreasing resistance. It facilitates a move upwards. This is the bullish trigger on the higher time frame. That doesn't mean we won't do that. It just means if we're looking for clear, concise, and plain cut directions, we are looking for those key levels. Until then, technically, whilst we remain underneath this resistance, this is still daily bearish, okay? If we're looking at the daily chart, this is daily bearish. If we're looking at the weekly chart, this is going to be weekly support. If we're looking at the weekly chart again, underneath this level, this is weekly bearish, okay? Underneath this level, this is high time frame bearish, okay? We have all these different ranges. If we're pushing up from here, we have a neutral structure whilst we remain underneath these resistances. This resistance is going to be our weekly to monthly resistance. Above this level here at 32,000, we are into a monthly continuation. The reason I say monthly continuation is because we're already in a high time frame uptrend as represented by this trend line. We are already in this uptrend. So it isn't we're entering an uptrend, we are actually already in a high time frame uptrend that could potentially continue on a monthly basis. If we go ahead and draw this RSI trend line down from the start of that rally across this peak, the most clear and concise and obvious way we'll be continuing upwards, or obvious indication, will be, of course, a break of this downtrend. A break of this downtrend trend line will invalidate the bearish momentum that has been accumulating within this move upwards and push the price upwards. Watch that trend line. This is probably the most significant trend line we're showing you in today's video. Well, the two most significant is, of course, this trend line over here and this trend line on RSI. Two most significant levels for both bearish triggers and bullish triggers. So let's go ahead, guys, and discuss the next move for Bitcoin on the smaller time frame, the immediate time frame, and really give you guys some things to focus on and prepare for. Let's go ahead and jump into it. Let's just remove all of this stuff on the chart, dropping down to our hourly chart. So if we look at this chart over here, we can see very, very clearly this level is an area of resistance, right? We have this extended period of 29.8 all the way to 30,000 over the last month and a half to 2 months. As we can see, if we break it down to an even smaller time frame, we do have a gap in the VRPV over here. You can see under around 29.76, we do start falling off quite aggressively. So we do have a potential downside gap that we could feel for the bears. If we do continue down, I'd be looking for initial support around 29.325, which of course is going to be that trigger point where we broke above and continued upwards, which will act as a major point of support. Let's go ahead and break it down to an even smaller time frame. So as you can see, we had an aggressive rally toward the upside. We need to bring up some of our technical indicators to see what the market is doing, seeing what the strength is suggesting. Right now, what we can see, the price is rejected from 30,000. We are currently retesting 29.8. Overall diagonal levels, we're not really watching the diagonal levels. I would suggest not to watch the diagonal levels today. Watch the metrics. What is the momentum doing? What is the volume doing? What is the open interest doing? Let's take a look at these key levels. Starting on the 15 minutes, we can see the RSI does have a negative shift which occurred. And we'll go ahead and actually swap over some of these indicators really quickly to get some different perspectives. Let's bring up a Marcus OB. So we do have a negative momentum shift here at resistance on the RSI, and we do have our red dots over here, which represent a shift from strong positive to weak positive momentum on the Marcus Cipher B. This expands from a 15-minute chart downwards. Remember, it expands from a 15-minute chart downwards. Looking at the open interest is of course still rising. It does mean people could potentially be entering these late positions. If we're looking at volume, our volume delta is of course falling, which does suggest weakness. So we have 2 or 3 signs of weakness here at our horizontal resistance, at this main point of resistance, which could potentially increase the probabilities of rejection. If we break it down to an even smaller time frame, to a 5-minute chart, we can see even further again, these same indicators are doing the same thing. If we look at a 5-minute chart, we can see that development of the momentum is actually flipped negative. We have overall negative momentum here again. The RSI is still falling. The CVD is still falling. The open interest is gradually plateauing. It does represent potential exhaustion, potential resistance, and again, it does represent weakness. If we start to see this stuff here apply at resistance, what does that mean? Doesn't mean we're going to nuke. It doesn't, that's not what the market tells us, guys. What it means is the probabilities in favor of the move down compared to the move up shift at any particular moment of price action. You have buyers trying to push the price up, you have sellers trying to push the price down. You have a constant battle between buyers and sellers at every single particular dollar, every single cent. There's a battle between buyers and sellers. The metrics are telling us what the price is doing, but more importantly, what the buyers and sellers are doing in regards to the overall strength to shift the price itself. So I don't really look at the price, I look at the metrics. So if we're starting to see the metrics, okay, which is a derivative of price action reflecting weakness, even if the price is going up, it suggests that the price is losing strength and it is potentially exhausting. When we start to see exhaustion at resistance, the probabilities of a move down increase over the probabilities of a move up. Remember, at any particular point in time, both scenarios are valid because at any particular point in time, there are bulls and bears fighting for the move up and fighting for the move down. So watch the probabilities, watch the ratios, watch the metrics. You have to be watching these key levels of liquidity. Very, very key point, guys. If you've got one thing you take away from trading is after large moves into levels of liquidity, the probabilities of rejections increase. Now, it doesn't necessarily mean the rejection will develop into a high time frame downtrend. It doesn't necessarily mean this rejection is going to result in a move all the way down, which will wipe out this entire move up. It doesn't necessarily mean that's going to occur, but it does tell us if you're looking to enter here, you're entering on a low probability move. And that particular piece of information that you just learned then, that particular mindset, that particular, thinking, that thought process that you just went over, is what will save you potential profits. It will save you potential losses. It will make you take better and more informed decisions, which will result in better entries, better exits, and of course, more results. I'm going to leave the video there. Quick overview. Right now, resistance is resistance until it is not. Is this a bull trap? Probably is going to be a bull trap on a smaller time frame. Will it move toward the downside and create a new low? Hard to say for sure right now. What we're looking at, the macro charts, the macro charts still look healthy. The weekly chart still looks healthy. The daily chart is still in this bearish territory. For the bulls to reclaim control and invalidate a move below 28.4, they need to break above 30,400. Thank you for watching a little bit of a longer video today, guys, but I hope you enjoyed. Hope you learned something, and I'll catch you guys in the video tomorrow. Have a great day. Cheers.